The next one, now it's shareholding. Who? Of Nathan. Who was Nathan? The CFO, ne? Don't forget that. Keep everything in context. Now this one, when they talk shareholding, they talk majority. So now you need to remember majority shareholding principles. Okay, so they say, identify the effect that the repurchase of nations identify the effect that the repurchase of Nathan's shares had on his percentage shareholding. Now let's go look at Nathan. So, do they say anything about Nathan here?
Yeah.
Where? Do they say anything about Nathan here? Yes. And can you see here they talk about repurchase. Nathan convinced the other directors that the company should repurchase 300,000 shares for so much on 1st September. Note that interim dividends were paid 31st August. Can you see he's doing this on inside information? Ne? He was waiting for the dividends to be paid, declared and paid before. Do you think he decided the evening of the 31st to have some of his shares repurchased? No, he knew that before. Okay, so now let's have a look. Nathan, this is his amount of shares, this is his shareholding. So you don't even have to do a calculation. Can you see? You're just going to quote. So you're going to say his shareholding decreased from 55 to 40. What is he no more? He's no longer a majority shareholder. Let's see how they marked it. You literally just had to say he dropped from this to ticks. If you want one mark, if you just said he's no longer majority. Okay, can you see what is their preference? That you always compare the 2 years. Right, so there's another 2 ticks. So let's go. What's the next question? Explain how the company was able to raise 4 million to finance the repurchase of the shares and the dividends earned by shareholders. Provide 2 points. So how did they get money? Oh, what happened there? Huh? I have 2 options. The one that you guys say is they took out a loan. Can you see they took out a loan of 3.5 million? Okay? Can you see that? Because the loan was 3 million, it's now 6.5 million. So you are working towards that 4.4, ne? So now, can you see? The loan increased with 3.5. That now you already got 2 marks. Okay? Remember now the retained income. We also talked about the retained income, but do they give me info about the retained income? No, there's no info about the retained income. But what info did they give me here? They gave me the bank. Okay, now if I look at the bank, it was positive 380. Now it's an overdraft. Can you see they actually took another loan? So the bank overdraft increased to 3.2 million. That's how they got 6.7 million rand to pay out. Can you imagine the interest on that? Okay, so let's see how they answer it. They say it moved to an overdraft of 3.2. 4 out of 4. Okay, let's say you got 2 right. 2 out of 4, that's still good. Okay. Remember now, yes, they did use the retained income. But now, they don't give you information about the retained income. Okay? So there's no figures to quote. And if you read there, in the beginning, they said every answer must name the ratio, or they call it the indicator, and the figure. Did they give you retained?
No, I'm just asking, can you use dividend payout rate and say that because it was 103.8%, and say that 3.8% came out as total income?
Okay, because you don't know the money value of that, it will not fit into this question. Because this question says, how did they get the 4 so they want rand value. Okay, in the end, you need to have answers that is equal to 4.54 million or more. Okay, so rather not the percent. If there's no other options, write it. But as you also see, it's not even in the memo. Okay, and remember this memo was done after the marking. So if there were things added to the memo, it would be in the released memo. Okay. So, next one. What do they ask? Give 2 reasons why the decision to repurchase Nathan's share should be considered as irresponsible. Okay, so you say you can't do it because of the cash flow. Eh? They don't have cash. Remember, paying out dividends and repurchasing shares. In the company law, it is stipulated that you must not buy back shares or declare dividends if you cannot carry it out with cash. Nee? If your cash isn't strong enough. Is Nirvana's or Nirvana or Navara, is their cash strong enough? No, no. Okay, so let's see what it is that they say here. So, first of all, the repurchase price is high. Now let's go see how they see that. So if I look at this, the fact that they told me, where did they tell me how much I'm buying? He convinced me, Remember the fact that they told me here how much we pay him, should be an indicator for you to see how much did we pay per share. So then I have the repurchase price, which they have already calculated for me as 11 Rand 50. Okay? So that's the repurchase price. Now let's quickly go look. What is the NAV? Do they give me the NAV? Can you see? The NAV is 9 Rand 90. Okay? So if you look at that, the NAV is 9 Rand 92. Do they give me the market price?
Yes. 400. This guy you pulled the first one.
Can you guys see this? So now I'm asking you, do you see something here? Yes. You see that we paid this guy 11 Rand. The intrinsic, the net asset value of the share is 9. On the market it's going for 4. Now I'm asking you, why is the market price so low? Why would the market price be so low? There's not a lot of demand for the share. Why would there not be a lot of demand for the shares? Let's quickly look.
On the outside, how is the company doing? No one is willing to invest in it.
Look at this. The financial statements of Navaria have not been audited. So, they are violating the company law. What is worse than a bad audit report? Is no audit at all. So are you going to put your money in that company? No. Can you see the image of this company is not good? Because they are not following the rules. So now people want to get rid of their shares. So there's an overflow of supply, but there's not a lot of people who want to buy it. So the market price is dropping. And can you think that maybe this is why Nathan wants to get out? Before his market price drops so much that he loses all. So he wants to get out. Maybe when they declared that dividends, maybe that's part of his plan, that he can get a little bit back. Because remember, interim dividend is paid and declared. Declared and paid immediately. So maybe he had all these plans in his head. So now he wants to get rid of those shares. Or maybe, but it's the CFO, it's his decisions. He had to authorize these decisions. Because remember, how did they pay out those dividends? Oh, by making one massive loan and a bank overdraft. That's how they did it. And he signed off on it. Because he's not following his fiduciary duty. He's not doing what is in the best interest of the company. He's doing what's in his best interest. So how will we answer it? Let's get back to point. How will we answer it? Can you guys see how much you can read through this information? Isn't this what you've been working for the whole time, to get to this point so we can interpret what we do? So let me show you. So they say here, can you see, no, you don't talk when I speak. Can you see they are comparing the repurchase price with the market price? Okay, that's 2 ticks. Remember what I said to you. When we talk repurchase, you want to go look, what's the NAV and what's the market price? And you want to, and you want to compare the repurchase price to the cost. So now you've done the NAV. I'm also tired, I'm sorry. Let's quickly see. Now, this one figures isn't necessary, So, look here, it does not comply with the law on funding repurchase. You don't have to write that. You can just say, it does not comply with the company law. Because the company law says you're not allowed to repurchase shares if you do not have the money. Do they have the money? No. Okay. They didn't comply with solvency and liquidity testing. Okay, they are not. So this is weird words. You could have just said they are not liquid enough to do this. You would have gotten your 2 ticks. Okay. He misused. Now look at this one. He misused his majority status. Remember, before the repurchase, who was the majority shareholder? He was. So who decided to repurchase the shares, even though it's not good for the company? The majority shareholder signed off on it. Okay? Do you think this is an ethical thing? No. Definitely not. Okay. Can you guys see how you have to start thinking when you do this? Okay. Let's do the last. Is that the last one? Oh, there's a 3.6. So let's look at 3.6. 3.6. The CFO has a significant influence on the success of a company. Of course he does. He's the one working with the finances. And you know what's interesting? Most CFOs are chartered accountants. Okay. Explain why you would agree with this statement. Because, why? He's in charge of the money. He needs to see that the financial records are up to date and done according to IFRS. What's IFRS? International Financial Standards. He needs to see that the company is audited once a year externally. He needs to see that the financial decisions is responsible. So let's see what they say. He must be an expert in accounting and financial management. He's head of finance. I think most of us is able to say this. He's responsible for good management of the money. Ne? He should be aware of the financial position or the financial resources. He's the one. Basically, if you look at this one, it's 1 point, 2 ticks. And I can tell you this will be marked leniently. So if you just say there, he's responsible to sign off on all financial matters. 2 ticks. Right. Next one. Explain whether the directors should be satisfied or not with the share price of the companies at the end of the year. Now, can you see they talk about both companies? Quote, 2 financial indicators in each case. Okay? So, if I look at this, where did they give me the market price? Yeah. So, the first thing I want to know is the net asset value and the market price. So you can say, you can say Navara net asset value decreased from 10 Rand to 9 Rand, whereas Guardian's increased from 11 to 12. Can you see Navara is not doing well? The market price for Navara decreased from 18 Rand to 4 Rand. The Guardian increased from 11 Rand to 13 Rand. Can you guys see that? So now they don't ask you anything, they just ask you to quote 2 indicators. So, can you see NAV, market price, 2 marks already, NAV, market price, 2 marks already. Okay, so that gives me 4 marks. The NAV is so much, or it increased and it increased, it decreased, it decreased. Okay. So now, they want a comment. I'm sorry, I was wrong. They want a comment. So, Guardian. Shares are in demand. That's all you need to say. How do I know shares are in demand? Because the market price is increasing. So what are you going to say here? Shares are not in demand. Can you see they don't want rocket science? They just want to see that you know. If a market price goes down, people don't want it. If the market price goes up, people want it. That's all they want to see. 6 out of 6. Okay? Let's finish off. Yeah, 6 marks like that. You don't have to write all of that. We literally look that you understand. Okay. The CEO of, no, guys, help me finish. The CEO of Guardian intends to offer the vacant position, remember now, that lady is retiring, of CFO to Nathan. What do you immediately feel? No, don't do that. Yeah, it sounds, yeah. Explain 1 point of advice. I will say, Nathan did not act in the best interest of Navara Company.
So he won't be able
He does not adhere to his fiduciary duties. He's irresponsible with
to fly.
money.
No job again.
So you can see here, can you see? Basically, I will look, they will even take it right if you say no good track record. Next. He takes selfish decisions. Can you see they do not want you to talk like someone writing an audit report with all those beautiful big words. They just want to see that you get what is wrong here. Okay? Yes. And that's ratios. Yes.